Hey guys, welcome. How are you? It's the Market Sniper coming at you, the traditional markets. Yes, lots of fun and excitement. Actually, almost went to Crypto Sniper, Bitcoin having a little bit of a rest, a couple of alts coming along there, but we're talking traditional markets today. Yes, we're going to talk about oil, we're going to talk about gold, silver, and we're going to also have a little look at the tech darlings. Are they looking a little bit jaded? They haven't actually done so much for quite a spell. Now, Uncle Biden, old sniffer himself, the kitty sniffer, is had the idea put in his head by his dark state handlers that as part of the left puppet show versus the right puppet show, all on the same body, puppety, keeping the kiddies entertained in the left versus right scenario, he's decided to double capital gains, he says. How much gets through, we don't know. It's not yet passed. But he says, don't worry, only if you're earning more than 400 grand. Yeah, all these kind of things. We'll see. Anyway, capital gains would be, it's very anti-investment, actually, because people that make capital gains typically invest them again. So it's not good for investment broadly. It is negative growth for new tech and various other things. So it's actually a regressive. It sounds like a simple, easy tax the rich type policy, which appeals to Bolshevik communists. But it's not going to quite pan out that way. And in the meantime, his stock markets are going to start to react to it. And in fact, if we just take a look at the darling, the biggest darling, 2.1, 2.2 trillion, thereabouts, currently trading down. This is Apple. Looking at the charts. So what we've got here on the likes of Apple, and we'll have a look at some indices as well, generally. What we've got is we've got a succession now of a couple of highs that have only gone somewhat higher and are actually in a little rounded convex throwdown at the moment right now. So tech's not feeling particularly good. Apple's not feeling particularly good. We're going to talk to you about Palantir, in a minute, but we'll dance around a little bit and go past a couple of other things. What I wouldn't mind doing is also showing you one of the other big market caps. This has actually been a pretty good performer generally, and did actually make our upside HVF over here. You'll see trading from there to there. Great trade. But is also rolling over as well. So it's been a better profile. One has been catching up more lately as Microsoft has sorted its feet out and is getting more re-rated. Let's have a look at a couple of the others, things, popular culture things like Netflix, them that were doing the Pedophilia is Cool Kiddie program. That was enough for me to cancel, but they are also a bit congested and a bit bloated. Done quite a bit over a period. You could see that we did at one point have some form of a squeeze structure that we were looking at, and now you've just got these marginally higher highs and a base there. This is not particularly healthy price behavior, and it's sitting there congesting. By the way, gap downs like that are never good. So I don't know what's going to be coming. Was it an earnings? You can check that. By the way, remember to keep an eye on your earnings. By the way, I'm also watching the comments. How are you guys doing? Tell me what's happening. You can hit that cog and mark events and say, show earnings on charts and other economic events. Pop. And when you point to them, it'll actually tell you. So it was an estimate and it met 3.75 as reported. And the estimate was 304. They expected obviously a bigger beat than they never got. That's why it came down. You can see earnings results. Often when you get gaps, another gap over here. Check it out. 1.74, the estimate was 2.13. They expected more and they got 1.74. That was another reason why it would have gapped down. Disappointing. So Netflix, not looking so great at the moment, but it's all at big, long, toppy highs. A lot of fluff, lots of margin debt out there at the moment. So, by the way, when you divide by M2, equities are not, amazingly, when you divide by M2. So what am I saying there? The monetary supply that is absolutely going like that. They're not abnormally valued. But in terms of PE and other measurements, they are absolutely abnormally rated. So it just shows when you create all this confetti money all other matrices blow out. But when you reset it to the amount of money that's chasing around and you deflate it back down into what would be a more normalized money supply measure, then in actual fact, it's not much higher by money supply measure to the others, even though PEs are extended so far, etc., etc. So let's also have a look at a few others. Amazon, your one world retailer slave factory run by a Sabatier and Frankist, where you get timed for how long it takes you to take a pee or anything else. I wonder if you have to, as you go to the toilets, check in whether it's a number 1 or a number 2, and whether you get an extra 15 microseconds if it's the big boy. Who knows? Who knows? That's such a lovely place to work. And they're fighting against unionism, because you see, communists actually don't like unionism. They preach a lot of solidarity. They preach a lot of stuff. But in real facts, they want oligarchical megacorp control and power. That's what they want. Now, Bill Gates wants to find out what it's like to have a mega name divorce. I wonder how much that will cost him in beans. But we'll see. So that's been Amazon so long. So it's tapped out at that level. And again, 3,500. You guys are not spending enough of your stimmy checks at yours truly one world order retail center. And that's upsetting them immensely. So they're also selling off quite a bit. Looks like the key level in the middle there is around about the 3.3. You're in between 3.5 and 2.9, bouncing around on a bit of a ledge. Look, long run, I actually expect most of these things to go up higher, but this is not a bad time for a bit of an adjustment. They did have quite a strong move. So it's not impossible that you get to the bottom of this ledge, let me restate. And it's not even impossible that you have a little bit of a calming sell-off if we have a bit of a risk-off. Summers in the Northern Hemisphere are not typically good for equity markets generally. Sell in May and come back on St. Leger's Day. Now, many of you will not know St. Leger's Day, but essentially it's a leave the stock market alone for the coming of the summer months and return around about September in a simplest term. So there is a natural cycle for that, because the city boys all take their big breaks. They go jump in their Learjets and jet around the world while telling you it's time you only had a locust burger, because the cow that farted that you would have been eating in your patty is spoiling the planet. So that's the way of the world. That's Amazon. Now, the things that have been coming up are banks, because they're being reflated by interest rates a little bit. But I wouldn't get into the financial industry as an investment overall. Etsy was one we were watching in our premium community. The links are down below. Go below, click the link, book a call if you like the idea of trading traditional markets with HVF method. And we use a combination of traditional markets and crypto markets. We are active in the traditional markets. We have lots of equities, FX, indices, commodities. We're going to be touching on gold and silver and oil still to come. In fact, we'll bring in an equity there. One we traded to the short side on our big oil short. You forgot about that. We won't stop reminding you. It's amazing. You always remember your good calls, but you don't remember the bad ones. It's almost like going to the loo. You just disown them and flush them. But anyway, yes, so we always remember our good calls. Plenty of bad ones, I'm sure. All the videos, we never delete them. They're all up there. You can check for yourself. But I can say the oil sell-off short, we sold PAA, Plains All American, at 26. 25 and 26 levels, number of entries right the way down to $3.20. That is huge. That is huge as a market cap. You're never a complete trader until you've made money like that on the short side. How do you do it? Very, very tough. You've got to have a method, and you've got to believe in it, and you've got to keep holding, and you're going to say it gets worse, and next thing you know, you're trading a pandemic. Yeah, who'd have guessed it? Same for Tullow Oil, same for a number of others. So we'll show you PAA next as well. But that's just a little look at Etsy. Quite steamy on pricing. A little bit of a slap in the face there. Squeezy, squeezy, Japanesey. In you go. A little bit of structure in there. Something I was just highlighting to the premium guys a little earlier in the day. In fact, I took some PLNTR. Let's show you PLNTR. Become a bit of a fave with the, who's our friends? Robin Hood. Our little hooded ones. Our little hooded friends there. Generation Millennial. Getting all into the game. learning their lessons, hopefully, like everybody else. So this is what we're calling that's going to be a bit out there. I'm going to remind you I said this, just like I said PAA. So we did internally a call that says we're probably going to turn around on this rally up. That was a while ago. And that would be a great early short on the round number in and around 24. Just run. $24. It has now crossed what we call our funnel and has triggered. And at the very minimum, we expect a 1538. And I will tell you further to that, a 6.82 on a left head and right shoulder, which is slightly offset because it's called a hybrid head and shoulders. You can only learn about that here on our advanced head and shoulders content utilizing HVF method. That is it. And how do we project? Why do we project? What does it mean? Etc. But there's patterns on both the upside and on the downside. And that's what we're talking about with you today. And we say there's a 1538, very reliable HVF targets with likely overperformance. And further to that, we have a head and shoulder target that might actually put a stake in the ground for that overperformance. That's quite a sell-off. 24 down to 6.82. Wow. Wowsters. That's almost a 70+% fall away if you'd got in at the short. If you're getting in at the 21 levels, it's still better part of 21 divided by 3 is 7. You're still on a 33% left, so a 66% fall in value. It's a big, aggressive, ballsy call. That's for the full target. You could, of course, close some at the 1538. You can buy puts on that one with strikes out the money if you're option traders. That is our big call of the day on the traditional markets. Palantir, PLTR. Watch it, see how it goes. You could have been in earlier, though, if you were with us in our community trading the equities. We were calling early entries at that point. So bear that in mind. By the way, non-farm payrolls. We will have a live trading day on Friday where we will see the non-farm payroll number in for the traditional markets. And you'll have an hour and a half of me covering gold, silver, FX, and we'll see the number come in. And all the traditional markets, oil as well, which we're going to be touching on now today. And then you'll get an hour and a half of crypto, where we've had an amazing alt season. We've biased overweight Ethereum out of Bitcoin. Our collateral is expanded. Our alts have run really, really nicely, having a down day today. Something for me to update on in the next day or so on crypto. So if you're not already subbed to the Crypto Sniper channel, go and watch that. We're making great bombs in there, and it's going very, very well as well. Also remember, Twitter at the Crypto Sniper and at the Market Sniper. Sometimes it's easier to put a two-liner out update. Getting to run these, we have a support team, and they're not always around at the key moments. So that is Palantir. That's the big one. Is it going to give you 66% from here at 21, virtually 70% plus from 24? That will be one you can watch. And next time you can be in earlier because you'll have made so much money, you'll be joining us. What about the others? Let's have a little talk. Intel has been losing ground on the chip front, and we'll also take a look at AMD. Just didn't have the strength of the others, but it's getting the downside action as well. So this all points to pretty weak NASDAQ, and this one's not had the fluff. It's been losing ground, as I've mentioned. I've got AMD as well here, which is a better version of chips, and we'll take a look at it too. We've got to stop at Tesla, but maybe we'll take in NVIDIA just once before. So here you have NVIDIA also being very, very congested. We were looking at possible setups on these charts. Let's clean the face a bit there. We're looking at possible setups. You can see we could draw second increment failure. This just broadening out. This, if we take the draws off there now, and just have a look at an uncluttered chart, you can see this is a whole bunch of ledge and then volatility. And this is a marginally higher high to that high, and that's a marginally higher high. That's never good. We always talk to you about people, they love trading. Oh, it's new highs. No, it's not good if it makes a marginally higher high and pulls back. It's not good at all. And in actual fact, you get broadening. And broadening is a sign of volatility. What do you then get? A whole bunch of volatility. Look at the zigging and the zagging. Now, volatility is great if you know what, and you have a method for getting in, and you can shoot and scoot, take some gains on the upside there and you're as quick to trade short. But most people don't make money like that. Let me warn you. You try be that guy and it's not your friend. Volatility actually kills most people. Why? Because they have to have stops. Their stops are incorrectly set. They're either too tight and they get shaken out the whole time. Harvesting losses, harvesting losses, harvesting losses. That is not an effective way to trade. So volatility doesn't serve. You need low volatility to high volatility expansions. Let's see what you guys say. The VIX is up a good amount. He's absolutely right. Is the CETO. I wonder if Francis has heard of the Bernikian. I don't know what that is. Will you be able to talk about ETH or BTC? No, that goes on Crypto Sniper. Physical silver bullion costs more due to manufacturing, says somebody else. We will touch on the silver and gold and the oil markets coming soon. Let's have a look at Tesla. So also, fair amount of concern. This was the last bullish upside trade we took from Tesla. That was some time ago now. And then it kept on and it bled on upwards. But then this was a rollover with a man-piece off the roof. You had a squeezy in there that was further downside. This in its entirety is very flag-like. It's not time to be chasing in. Technically speaking, that is not time to be chasing in. Yes, you've just had a down leg and you could get some moderate bounce up to our splitter, our midpoint there, before rolling over. It can do that. That doesn't mean it's a short right now, the second, but it could also be, if you take a look at those double level lines there, it's leaning on it, it could spill through if things were to get worse. So Uncle Joe Sniffer Biden and his plans are killing the US stinky stoic market for now in terms of the high growth. That's not to say they hadn't done a lot already, but there is it's certainly not much feel-good factor right now. Not much feel-good factor right now. Looking a bit bloated. Tech is looking a bit bloated. Let's clean the face. That is uranium, something looking a little less problematic, and that has been going up, although the volatility is climbing. That's an indication of the volatility climbing. We call that a hunt volatility trumpet. Yes, an expansionary event. But it's moving up. It's moving up, but it might square up a little bit, but I suspect you'll get further upside. So energies, we're actually quite bullish. Energies, especially clean energies. Nuclear is, wait for it, clean. Yes, you didn't expect a man to say nuclear and clean in the same sentence, but it's true. Relative to coal, fire, and oil, it is clean. And it's actually quite safe as well. They'll have you believe it's risky. Face ache. Also selling off a little bit, but it did okay out of this period. It had this lengthy bloated period here. Eventually it got going, but it's also feeling a bit of pressure now. So it's far from being the worst, but it's looking a little bit tired now. Adobe, again, none of these guys are making new highs. We were on a 4-hour here. And all you're seeing are ledgers. I'd probably draw one line here, the low level, and one line here for the high level. Say overall you're like that. You've got a sort of lower half, the early doors bit, and you had the upper half. You've only been once down here, but you are now throwing it down over there. Ledgers, especially on a bull market, are not necessarily bullish. They can, in fact, resolve in more volatility. They can break to the upside, but unlike a falling wedge, which overtly sets up a nice squeeze and a spring up, they don't have that same volatility compression into expansion rate. So they just don't give you that extra zip. So what do the guys say? What do you think about the GME AMC movement? We can have a look at that later on. Let's leave that for a bit of a check-in. So let's cover PAA. So in fact, we should do the oil first because I think it'll make more sense. And that's our friend Beyond Meat. I'm pretty sure the control structure is going to be behind that one. Keep an eye on it. It'll be Tesla Mark II. If they get that ball going, you know, that'll be your substitute locust burger coming up there through that those doors. Courtesy of Uncle Bill. So, silver, we'll start at the top. It's been hit a little bit hard today. It's coming back down. It had a great day yesterday, and now it's been hit a little bit hard. Here was a couple of thoughts we had on it, that it might actually just be getting away. There was a long period of serious support on silver. From the 22 to 23 levels, you could see, don't forget, gold was selling off in a flag, lower, 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 lower highs, lower lows. And then that support came up under here to 24, 25. So it's staircased up. There's a buying ledge that's staircased up, but it's not been allowed to bleed out the top too much. And we started to wonder if that's not a little flag for a break. But somebody says no more. So it is seeing some selling there. Why? I'm not entirely sure. What we do is we treat this particular Wall Street bets thing as a little bit of an outlier. It was a bit of an excessive move. We call it a cutout, and we just cut it out. So we think we have some structure there. Pullback, maybe a buying opportunity. Just a little bit of risk off today because the stinky tech stocks are weak. This is also pulling Bitcoin back. It's pulling crypto back. Risk off right now. Risk off right now on a number of levels. We'll cover it on our next crypto update, how the BTC dominance ran a key inverted target to the downside, and how Ethereum dominance has been close to running its key levels on the upside. So all these things, it's amazing how as these targets are meant, you get that wave of, we need to calm it all back down. So let's have a look at gold, because gold is the god market over silver. You can see those layers, how there was no such thing if I leave on the legacy silver layers. But we do have a channel, and my reckoning is that you've broken out of that. And there's actually a number of targets generated, no less the 1820 as well over there. So we'll show you those, and you have broken out, and then you've done a fairly reasonable flag pullback and now push up. You're just getting straight as you're pushing up that first knockback, which has come quite quick. Now we did once before break out, there was no follow through, but this one looks more plausible. Why? 1673. This is all at the 1680 level, which was your May Corona event, where you sold off there, you sold off there, and you sold off there. So you were resisted 3 times before you turned into support. So this is a very interesting and important level that we're carrying over there. It's the 1680 for that. And we did a double bottom on the 1680. So we're going to drop the time frame and have a look at that. Double bottom on the 1680. Let's have a look at that. Who doesn't like a nice rounded bottom? So there you go. It was quite convex. Up and over. Twice now, supported. Then you had another little left shoulder, right shoulder, teeny shoulders. You can see them more clearly if I drop time frame. But that generated a target that was met. Then you messed around, kind of squeezed along, and you broke up, and that led to the breaking of the big channel coming down in TG Pink. Then you had your first pullback, your follow-up, and your second pullback, and overall that's a move. But you did just hit a key level of targets at the 17.98. That was a legacy target from previous structure. And of course, you're approaching the $1,800 mark. So we've been resisted there, there, and there again, and there again. So we are building up ahead of steam to get through that. And so you have that as a price structure. Overall, a target at 1820. So once you release the pressure of the 1798, 1800 range, I'm thinking you'll jog quite well through that. but you might just first pull back and mess around and need to wind up a little to smash it. And then it'll be broken with momentum if it is to be to the upside. But you're breaking out channel roofs. So this is all bullish price behavior. Gold is showing bullish on the medium, larger time frame. The fact that you're down that amount now, we don't even know how today will close. That's very short-termist. Overall, that's what you've done. With an A, B, C, D, and then now continuation is the suspicion. We suspect continuation. You've made bullish targets already. That's another neckline that created that target over there. That's all a W bottom. You see that? So overall, we've got bottoming structures and targets being made to the upside. So we continue to expect continuation. That doesn't mean you don't have a bad day. A day where you sell off like you're selling now. After a number of positive ones. So gold looking good. Silver we looked at, I think. It actually touched 27, got a bit of a spank back. So we'll see how First Majestic does. First Majestic is actually right now a little bit crappy. It's underperforming silver. So it only went up a small amount on the upside and has come quite some way off on the downside. So it's actually, and it's not always done that. It's sometimes overperformed. When silver's been down, it's sometimes held on. So this is a bit of a dull spell for First Majestic for me. It's almost as if something needs to come out. Somebody's crapped in the drinking water somewhere. And there's a little bit of bad wind in the air. But who knows? Sometimes you just have a spell like that and then it starts hyper overperforming. To be down to 15 from there when it was at 16, 15.23, you know, you lose 80 cents. It's a bit over the top, especially when silver went up to take some of it back and you've largely not gone up much and you're taking out it. So it's a little bit of an underperformer at the moment. So we'll go to the PAA, which is oil, but we're going to check oil first. So you might recall, we were the guys that said single-digit oil. We don't know why. And then we were the guys that said triple-digit oil. So that big-ass red line is part of what? Remind everybody. Can even put it on the monthly. So that's WTi, look into my eye, look into my eye, fantasize. Yep, it went right down to 0, and on the futures it was negative. Big sells there, which we were involved in there and there. That took you to all-time lows, 30 years not seen, single-digit oil. And in fact, you got 0. Snapback, really strong. We're setting up right there. That's that big red line. We're looking for a breakout of this macro falling wedge. The macro falling wedge. By the way, by the time you start running these levels, these legacy levels, you will already be at $100. And we expect not only will you get past that, you will make new all-time highs. That means WTI will take out 150 mark and traded around 147 in and around 2007-8, just before subprime crisis and the great Lehman's non-bailout and the bailout of all the others afterwards. So let's have a little look into that. So we're squeezing higher on a rising wedge. I would have preferred a different structure because you don't know what might happen. You could keep, if all of you just go in and chase in right now, you could have a pullback, you could squeeze higher, but then at some point you can have a fairly abrupt sell-off that could bring you back down. I only think we really got away when we've taken out the $68 high of around about, when was it? March 8th. So oil. Don't forget we've got the escalation that's continuing on the Ukraine-Russian front. That's officially without an oil war premium in it. But there is murmurings, mumblings, and aggressive actions being taken. So you could have a real shortage of rigs out at sea. You could have supply shocks. We've already had our little test with the Suez Canal parked sideways tanker. people could indeed be finding out that supply chains could come under great stress if there's not enough oil around. We have past peak demand in oil, but that doesn't mean we're falling off a cliff. It just means a big rounded top. When the supply downgraded the amount of supply immensely, and as a result, we're more going to be prone to price rises than price falls. And we won't shake oil out of our economy in any great hurry, despite whatever progress you've been told is being made in other renewables and forms, and battery-driven cars, etc., etc. So with that oil looking so weak, here's Brent, by the way, for the UK guys and the European guys. We could actually just put that on. I think it still might have a down stab before it goes. Let's go up to the monthly. So for this particular draw on Brent, we're a little bit further away from the top line. The wedge is a little bit different. Brent never actually traded zero. It didn't trade below 15. The call for single digits was on WTi. So there were your short calls again. So this one's a little bit more further up to go. We could still set up and wind up and do a fancy thing there before we head off. So there's still time. I just want to keep you in mind of this, that overall energies have a real Bunsen burner out their backside. They've got fire, they've got gas to burn. Natural gas is up. Don't forget, this is the big long non-farm payrolls. We will be having our trading day this Friday. We will see what comes in with that number. But the one thing I won't stop telling you is that this is the big long. You have an opportunity to get a bit of leverage, responsibly trade with a really good method. Hit the link below, book a call that says book a call here, and you can max out this period. There's going to be a lot of longs, but in any long market, there's some very violent sell-offs, and you can get cleaned out if you don't know what you're doing. You need to take, with leverage trading, profits off the table. You've got to have a target, a stop, and an entry on a limit basis, not chasing the market. So important, these key elements. The only way to exploit that is through method. And you can also position investments. That means there's much less leverage and you grow slowly. Fine, you can buy an ETF in these areas. You can do various other things. But that is the slower road, but it's also safer if you don't trust yourself. So let's have a look at the dollar index. This is what we forecast. We expect the dollar index to turn down again. I'm going to let go of the draws for now and just remind you the big picture. Again, history, we were pretty much long the dollar here at this point, and you had one of the cleanest, smoothest rides. Then marginally higher highs, broadening structure, it was a bit choppy. Then you went up to there and down. So we've got this level looming. I think we're going to potentially run it. I really do. Because Sniffer Biden is a dollar killer. He's a proliferator of note. He wants trillions and trillions, programs upon programs. It's so nice to sound like Santa Claus, isn't it? Only he's not Santa Claus, it's impoverishment of the poor. That's what that is. It's impoverishment of the poor. Few realize it, but it's true. Because by destroying the currency, the only people who really make money are the people that are long assets, that are overweight long assets. Because property goes up, your $1 million home goes up, your stock portfolio goes up. How big are the poor's stock portfolio? Do they have a 1.8 million home custom designer pad in Vegas somewhere? No, they do not. They have small homes. They often rent. They spend every last penny on paying the bills. The prices are doubling. Their salaries aren't. They're getting poorer on disposable income, and you're getting none of the upside inflation of having assets that will appreciate with the inflationary strategy. I don't know anything about the ETF JO for coffee. I'm afraid if I don't know, I won't say. So this was the big falling wedge. You came out of the falling wedge, but I'll tell you something, and it's what our premium guys have been aware of. That structure is not bullish. We called for a rally when we hit the bottom here, but that rally will be a dead man's rally. It will be a final last exhaustion move up, in my opinion, of what comes next. And I think you will break and trade lower on the dollar. So Brent Johnson's going to have to wait a lot longer for his milkshake. It may not be coming as quick as you would like. It could still come, but right now, while we have fiat, need to have a worldwide fiat crisis, I think there's a chance you could trade the 88. Look, you could sell off and not go lower than the blue line, but I think given enough time we do. That is the previous low. That means new lows, and remember we failed to make, this failed to make a new high. When you had that structure like that. And we are here. We're going to run that low on the bigger time frame. That's what I'm guessing right now. That's what it feels like. In spite of this going up, it could be a short. It could be a short somewhere around the 92.5 for the downside. That's our bias. Bias is bear. Bias is bear. Yes, indeed. We've got a lot of currencies at the moment that we can look at. I mean, you can have a look at the South African rand, and it's just gaining in strength against the dollar as an indication of how weak the dollar is right now. This was an unbelievable first inverted in a new trend, by the way. The trade no one would have taken, and you would have got positive carry the whole way down with overperformance. First setup, slap in the face, first setup in a new trend. Man, this thing just kept going, going, going all the way down. And you get the difference between the interest rates. I think they're in very high single digits or low double digits, like somewhere between 9 or 11% in terms of purchasing power parity and interest rate differential. Whilst America is like virtually flat. You don't earn anything on your savings in the States in interest. You could have picked up positive carry and a short side. That's what's possible. And you would have been shorting the dollar. Yep. So what about oil? Well, we'll show you Aramco. This one's moving real slow, but it's been a setup as well for a while. And we see $38. They're trying to sell off some of it, but we see 38.43 and possible overperformance. It has set up in its recovery once before and overperformed as well. Another structure getting ready to go. So it points to strength. I'll give you a recent oil that you could get a very high multiple on. It's not the biggest market cap, but that is Battalion. We've been sharing and talking about this. There's a setup for it in our community for some while now. Just stalling at the second level there, 13.29. $25 we're calling for Battalion on the upside. And we've been calling that before it broke from 9. You could have been long from 9 looking for 25. That's more than a 2.5x. Even now at 12.62, it's a 2x. And you could try buy on a pullback here, Battalion, BATL. Oil. We are bullish oil stocks and oil. Let it be clear. We are bullish oil stocks and oil. The silver is the more frustrating one. We have precious metals, macro bulls, but we're kind of waiting for setups to get moving. Not being plain sailing. They've been put on, they've been reined back for a while. When they go, they might go immensely. Silver might go a huge amount. Certainly encourage you to buy and stack and keep off grid, not in, not with the person who sells it to you, not in some safety deposit box. Off grid. But Battalion as an oil, the oil trade will be easier because I think there's less forces geared to keeping it down than there is in even the precious metals. So as I say, from 942 to 25, Battalion oil, real good trade. Write it down, BATL. Don't forget to join us, as I say, on non-farm payroll. Very cheap. Pop on, 3 full hours, half an hour break in between. It is on the link below. It's being shared through the comments right now. You can come and join us. An hour and a half on traditional markets, FX, equities, indices. We didn't show you too much of the indices. Let's have a little look. We can have a look at NDX, NASDAQ. So the thing I want to show you about this is a bit like how Bitcoin was set up when it needed a little bit of selling off. See these marginally higher highs? Don't like that. Typically you get a bit of that. That was continuation pattern, and it preemptively went. But then it went slower and it made a channel. It went up there and then it threw it down. You've got a bit of a bull flag there and there. Not a perfect one, but you popped and went over. This is not good. Double top in there as well. That's already made target. Small one. That's a leg down. It's not runaway. You're not missing anything by not being long in the NASDAQ at the moment. For me. SPY. Not quite as bad, but also looks a little toppy. Not a terrible spill, but a bit of a gap. It's popped out of our megaphone, which is long continuation. Sat on the top for a while. Once it broke. So you can see that. Breakout, got on top. Sat on the top for quite a while. Eventually squared itself up and got on with it. Looking a little bit toppy, but this is not fatal. You could get a small micro cap, it's a daily chart. You could get a small micro head and shoulders there. Left shoulder, head. We could have a small rally tomorrow and you could have a right shoulder. You can come down somewhere to these levels and even a bit more. You could bounce on the roof again. It depends how the risk off continues. One of the key elements of that is going to be the bond markets. That is the bond markets. So let's see if I've got one for you on the bond markets over here. TLT. Just clear the face again. So this eventually timed out after making the blue line, which is a possible head and shoulder. Remember, there's a left shoulder. This could all be a head. So we are wondering, maybe that is it. Maybe this is the right shoulder starting and you get a bit of a rally, but this is not too strong. What are we looking at here? The 20-year Treasury bond ETF. Capital value of Treasury debt going down. Looking soft and weak after a major spill. That's where we expected it to see, but we also thought there was a chance the target would be run of 130.87. That hasn't happened. It could happen late. Our time zone for that happening was here. So you would have closed your trade there on the timeout, at least the bulk of it. But I still think it will happen. It will just happen late. And then suddenly it can play catch up and have a spill. These are the yields, the interest rates, the exact opposite. So the big thing that we're saying about these debt markets, many of you don't understand the debt markets. We lose you when we start talking the debt market. It's really important. Let me just put this on logarithmic. That we have ended in 21 a cycle that started in 1981. How many of you were born before 1981? I'm guessing less than 1 in 3. 1981. Your entire existence, you have lived through a macro bull market in the bonds. A macro bull market. In other words, bond values only went up and yields only went down. Interest rates were the highest they ever were when you were born, if you were born on 1981, September. And they haven't been in any serious way in that direction since. Every rally sold off. Every rally sold off. Every rally sold off. Time and time again. Every economic crisis. This is your Federal Reserve that has brought to you crisis after crisis after crisis, that has justified further reasons for further interest rate cuts, to justify further liquidity, to justify further destruction of the fiat system. People will say, oh, it's the end of cycle. This had to happen. This is natural. Humans always do what they do. No, a group and a cartel of people have actively worked against the system for 4 decades to break sound money and interest rate policy that is of economic long-standing value. They have set about breaking the economic system so that insiders borrow for nothing, buy assets, they create so much new money that they are destroying all basis of comparison. Inflation is a tax on you. You put a 2 on everything that used to have a 1 on your notes and everything. You get dragged up into higher tax bands. Plus they increase your capital gains. And now they're going to bring in green taxes and passport controls and pay for a test and pay for this to prove that you're non-toxic to other people. And everything else is being brought down upon you in an environment where the money is being devalued. And that means your bread goes up, your everything goes up, and your assets go up. That's why you have to be in the asset markets. You have to be in the asset markets. It's the only thing where you can claw back lost value. Sitting with bank accounts full of fiat is dangerous. It is a guaranteed loss of your buying power. Obviously, don't do something destructive with it. It's better that it loses slowly, but it actually compounds pretty quickly. These guys' game are putting you on the wrong side of a compound interest equation. They've put you on an inflation equation. If you are facing 18% personal inflation rate, every 5 years, your money's buying power halves. That means your living standards is twice as much as what it was before. And I think for most people watching this channel, that's probably quite close to your personal inflation rates. John Williams has it around 9.9 and 10% for the layman average. You will probably all be higher as slightly smarter, slightly awake people that need to make use of more high value items. It's not unfeasible. The CPI they give you is an absolute fraud. They keep measuring different things of different size. They ignore shrinkflation. They ignore products that are automatically going up in price. They add products that are deflating in price. They do many, many tricks to keep you fooled. This is a huge, in percentage terms, final capitulation. This is the point of this chart here that I've put here. So let me just make this point. This is typical of technical analysis at the end of cycle. An absolute throwdown capitulation. And you guys get, yeah, but that was COVID. There's always a reason. There's always a reason. An absolute throwdown. They used the pandemic, scamdemic to throw down rates to virtually nothing. And you have snapped back really hard. You're already back at this level. If you look at the percentage scale of move, this is the highest volatility period in 40 years. That has been the highest volatility period on interest rates. In other words, they've gone double, triple from their lows in 40 years. This is typical. When volatility increases, massive final capitulations and snapbacks, this is how you bookmark an end of a cycle. What does that mean? You start going the other way. This trend is turning. You want to keep government debt? Good luck. Don't invest my money. That's all I can say. I'll take everything else tangible over government debt. It's going to be proliferated, deflated, and inflated away with printing of more and ever bigger money. That is the only way. This is a deceit default on the economic system that they are then going to push into a reset economy because it's end of time. They have engineered this failure in the debt markets by a proliferation of lending, mainly accelerated under Alan Greenspan, the worst Fed chairman ever, but who pretends that he was all doing it for good reason and he never saw what was coming, and black swan events and a variety. Here are those rarity black swan events. There, big drop in inflation rates. There, big drop in rates. There and there, big drop in rates. 2001, the dot-com boom, and then a recession for America, 2003. 2007, subprime. These rare black swan events just keep popping up. Oh, there we go again. 2012, not enough reinflation. We'll drop again. 2015 into 2016 lows. Oh, China debt bubble. Oh, COVID. Every single one has a goddamn story They were architects of those stories. They are the architects of unsound money principles, and they know that by doing that, they push all the wealth to the billionaire asset-rich class, and they impoverish everybody else. That is their game, to impoverish you. You yourself can fight against their game by positioning to win. You need a method, you need a bit of leverage, you need some investment as well that's unleveraged, you need a position, you need to trade the big long sensibly, and we can help you do that. We don't like them. We think they're deception orientated deceivers of great note with dark agenda about who gets to live and who doesn't. And they want to make you dependent on government so that you are absolutely a UBI slave. Therefore, they can force you to take vaccines. They can switch your life off and play God over you when they decide. If that pisses you off, if you decide you do not need their help and you want to fight against this parent that only has your best interests in mind, you will want to click that link below and maximize your wealth during this season. This is where we're at, guys. This is deception times. Truth is a revolutionary act. Hear me now. This is massive on this chart, and it is the end of cycle for debt. And we continue to assert that, and we've asserted it ever since COVID. It is now over a year since that event. And only now, in the last 2 or 3 months, are people talking about inflation. Corn has never been higher. Coffee's breaking out. Natural gas is up. Copper, we didn't show you. Copper, we called it on this channel. We've even given you a ton of free trades to give people opportunity to earn their way in. But you've got to take them, you've got to make them, because the people who are paying for them get them first and get the bulk of them. This is what's happening in copper. We gave this one to you a while ago, but not that long ago that you won't remember. It's still got further to go. 4.6, and it can overperform. It's just marched its way up the whole way. Marching, run at second interim, up she goes. 4.6130. Zinc, nickel, you name it, palladium. We've spoken to you about it. These things are coming. In fact, the monetized metals are the worst performing right now because they're the dangerous ones to the control structure. They give away the game on inflation. Gold and silver are canaries in the gold mine. Those are the last to be allowed to fly again. But will they play catch up? I think they will. I've said before, the silver trade is the trade that is wrong until it's suddenly so goddamn very right. And that takes a certain kind of patience. So that's why I use investment, and I use the discount window, by the way. We have a link for you below where you can go to Pure Gold, the company, where they sell silver bars, 1 kilo of beautiful silver, real money, a buffalo, 99.99%. In fact, you can grab that link below and you can start stacking for yourself. Here's one example. I keep it here just for the example. Real money, feel it thick and heavy. Put that in your fist and give someone a clout. I tell you what, that is weight, that is gold, that is silver, and it's got the old nag's head on the back as well. But you don't pay for that, not in my books. And there's your buffalo over there. Go and grab physical silver and stack. They're holding a discount window open for you because they don't want it, the lie that they're telling, to get out. But eventually it does. You can't hold back the tide. This is an accumulation window that should be exploited on silver, and every other industrial metal is climbing. Rhodium, palladium, copper, but no one knows about that. They don't even know the price. You could stop 100 people in the street and ask them what's the price of palladium or copper. They wouldn't be able to give you a single hope of an idea. But gold and silver are key money points. Use the window wisely. Okay, guys, let's have a look at some of your questions. Think of Terminator, says somebody. You will rent everything, own nothing, and be happy. Yes. Who's on the other side of that trade? I choose to be that guy. I'll buy all the assets of the peasants on the cheap once they've been bankrupted and below. I'd rather be that guy than the guy getting the spanking. Although I don't think anybody should be that guy. Isn't it lovely how they tell you you'll own nothing? In other words, we'll have taken all your shit. That's what they're saying. We will shake you out of every goddamn market. We'll make you indebted, and then you'll get debt forgiveness only if this, that, in the other, plus your vaccine, your Maxine, and everything else. 3 updates a year. Good luck. Okay. Thanks for checking in. We will be talking on crypto during the course of this week. It was an interesting day today, a bit of a pullback. We warned our community on account of Bitcoin dominance running through the key inverted HVF. You can come and find out more. We're still biasing long ETH though. Our collateral is still held in ETH, and we still like BNB and some of the majors. We see those as still going to come up strong. So if you're also into the crypto, great markets. Technical analysis works beautifully on traditional markets and crypto markets as well. So I will see you for non-farm this Friday. Click the link below. Come and have a try before you buy. Small amount to invest, to have 3 hours with us. You'll have the recording for 30 days. You can listen to it. You can check how it pans out. Everything is there for you. Won't be touched. You can listen and watch. All right. Thank you for popping in. Enjoy yourself. Keep an eye on PLNTR. Will it lose 66%? Well, we're calling for 15 certainly on an HVF, but there's actually a possibility of an even bigger fall. That could be very risk off. Okay. I'm just saying, we'll see how it turns out. Bye from me. And we'll catch you later. All the best.